Hello again, everyone. Welcome back. In this technical analysis of the stock market video, I'm going to focus on the financials this week. But first, before we get into that, it's interesting. 2 weeks ago, I put out a video called Exhaustion, and I focused on the semiconductors. And I thought it was rather interesting that this article I came across here on Bloomberg, and talking about NVIDIA market reaction shows U.S. rally is over, Morgan Stanley's Wilson says. And he said this shows the rally this year is exhausted based on what we saw out of NVIDIA price action this week. So pretty amazing price action in NVIDIA, but it also got reflected in many of the other semiconductor stocks, including the semiconductor indices. So like the SOX and the SMH. All right, we're going to start off here and focus on XLF. So this is a weekly view of XLF. You know, we had the big March crack that happened. And right now, I can't help but wonder if we aren't in the process of rolling over and breaking down again. Now on XLF, it hasn't really showed up just yet. But we're going to take a look at the bank indexes, and we're going to take a look at a couple of banks and one other financial. Now, the interesting thing here on XLF, look at this big gap down here that occurred. When did that occur? It was in November of 2020. That is just begging to get filled. It's going to be real interesting to see how long does it take before we break down and start going after that. You know, when we look at, here's the daily view. So a couple of things jump out. All right, so here's the trend line break that happened in March. February is when it started, and the waterfall happened in March. So February 21st, the big trend line break. And, you know, we come down hard, put in a bottom there, you know, and within a couple of weeks. And then we rally back. We did not go to new highs on this ETF. Did not go to new highs, and now we look like we could be rolling over, although we haven't broken this trend line just yet. Now it is interesting when I go and take and just strip out. Actually, that's not what I'm looking for. Let me pull it up. Actually, here's what I was looking for. Back over on the weekly, I forgot that I did this on the weekly. Okay, so when you strip away a lot of the noise, the moving averages and everything else, you know, you just simply look at the price action, and this is what jumps out at you. It looks like a head and shoulders consolidation pattern, okay? You know, we come down hard, you know, in 22, and then we start this kind of sideways consolidation. And now if we come down, continue to break down in here, break that trend line I was just talking about, and then break this trend line, this could be really interesting in terms of an acceleration that leads down to filling that gap that I was just talking about. Okay, let's go back. I'm going to look at a couple bank indexes. Okay, so the first one we've got here is the KBW Bank ETF. Now, when I was looking at this and looking at the S&P Bank Index, the KBE, this looks like it leads the KBE, and I think it even somewhat leads the financials. Back in February, we got a breakdown on February 21st in here, and it rolled over, and then that led into that waterfall that we had. Well, we've already, in a couple of things. Notice how we didn't even come close, just like on the financials, although it's much more exaggerated. We did not even come close to coming back up to the February highs. And so here we are. We've kind of rallied, had a weak rally off the May lows, and now looks like we're breaking down. We broke the trend line on August 15th. So are we in the process of rolling over? Is this the smoke I'm talking about? I mean, you start to see the weakness in banks like this. Is there something inherently going on that is going wrong with the financials? And I know a lot of people have been speculating, you know, on the banks because we've had some, you know, a couple very big bank failures, of course. But it does make you wonder if there isn't something that is continuing in here. I've got my own ideas, but let's just focus on the price action for now. So let's pull up the other index, the KBE in here, and you notice how we didn't get a trend line break until March 7th. KBWB, we got the trend line break on February 21st, and then we got it on August 15th, and now we just now got it on August 22nd. So the S&P Bank ETF is lagging a little bit, but it is also looks like it's starting to break down. Okay, and so when I look at this, we look at the same kind of picture. Did not come up and challenge the February highs in the rally off of the May lows, and kind of a weak rally, and now we look like we're rolling over and breaking down. Let's take a look at three stocks. I'm going to start off with Citigroup, so let me pull that up. Now, I've talked about Citigroup before, and I talked about the financials back on July 8th, but look at this breakdown that's occurred in Citigroup, and it just keeps relentlessly selling off. I mean, it's just day after day after day after day, and it pushes lower. So what did we do? We broke down out of this sideways symmetrical triangle, which was within a bigger triangle. And this is the Elliott wave pattern that I had identified. And what I was looking at, I called it a running triangle. That's what it looked like to me. And then we got this E wave, which sometimes the E wave can morph into a triangle on its own. And that's exactly what we got. And now we're getting the breakdown. Now, I do think there's more to go to the downside, but we're already getting very, very stretched. So I wouldn't be surprised to see a bounce back up of some kind. We'll see what happens in here. But so far, this has been very relentless to the downside. Okay, so that's what's going on with Citigroup. Now, and again, where are we talking about? If we go back to February, here's February or January, I guess. Here, January, February, March time frame back up in here. Here's the big breakdown that occurred with the banks. Sideways in Citigroup. Okay, we haven't come back and retested this. We did initially, I guess you'd have to say, in April, but then we've just kept oscillating and tightening and tightening and tightening, and now we're getting the breakdown. So we broke down on this on August 2nd, actually somewhat earlier than the indices, the bank indexes, the ETFs that we just looked at. Let's take a look at JP Morgan, which has been very, very strong. So as opposed to what we just looked at, here's the February, March peak. Here's the sell-off. And of course, JP Morgan seems to be like one of the strongest banks, if not the strongest bank. And so now it has rallied back well above where it was back here in February and March. But it too seems to be breaking down. So we'll see what kind of follow through do we get on this. Okay, so we got a first break on August 22nd. And then we just chopped around for 3 days. We'll see, do we get any kind of follow through to the downside? And is it going to mean something a little bit more serious? Let's take a look at Charles Schwab. Now, something a little bit different and seems to be a little more severe based on what happened back here in March, February, March. We got the breakdown right here on March 7th is when it broke that trend line. Let me get the trend line in here that we're talking about. And this was a counter trend that basically talked about the rally from July, well, I guess June, July lows in here up to the peak that occurred in January. Okay, and then we start breaking down lower lows, lower highs, break the trend line right in here, and then it goes into waterfall mode, basically. It started to break the trend line right here on March 2nd, but it really got it right here on March 7th, and then it just went into free fall. Now, it seems it got its legs underneath it here in early May, come back. Looks like, okay, we were going to take off and go somewhere, but after, I think this might have been an earnings day on July 18th, it really didn't go anywhere. I mean, it was like that was all she wrote. and then we come back and start rolling over and now breaking this trend line, and that occurred on August 17th. So it looks like this too is in breakdown mode, kind of in sync with what we're seeing with the indices and the other banks. So an interesting picture, and where there's smoke, like the old saying says, there's fire. All right, everyone, that's it for this weekend. If you felt like the video was helpful, give it a thumbs up. If you're not a subscriber to the YouTube channel, hit that little subscriber button. And if you'd like more of this information on a regular basis, head on over to joehenches.net. Check out the website, check out the membership. Everyone have a great week. We'll talk to you on the next video.